Sana.
And I'm Isha Hemchand, and we're
We are the founders of Finance for Teens. So we are two high school seniors from Dallas, Texas, who developed an interest in learning about the stock market and financial literacy. After taking an Introduction to Investments course last summer, we looked for opportunities to further our knowledge through the application of some financial concepts, but really found no organizations that suited what we were looking for. As a result, we initiated Finance for Teens, making it our goal to educate students like you about important financial literacy and investment concepts that are applicable to high schoolers. So we are so excited to be presenting to the Leo Club today. And let's get started.
So some of the topics we're going to be going through in this presentation include, but are not limited to, loans, how insurance works, how you can get introduced to the stock market, and we're also going to be talking a little bit about different investing, how to invest, and different ways that you can invest. So the question is, why is finance important for teens? And as a teenager, we're getting into college, we're experiencing things like buying a car and ideas like car insurance, and a lot of the stuff we're introduced to requires an understanding of finance and ways that in which you can conserve your money as well as grow it. So examples like taxes, how does rent work, college loans, health insurance, and an early start to investing are important topics for teenagers. And to the left, you'll see a quote I picked. I thought it was a pretty cool quote. It basically talks about why many of the financial problems we have today is because a lot of teenagers at a young age don't understand how finance and economics work. So an understanding of both of these areas is essential to success in any field.
So as a high school student preparing for college, it is crucial to be aware of the significance of budgeting. Essentially, budgeting is creating a plan to manage spending habits, working to ensure that you have enough financial flexibility to pay for your necessities. Furthermore, as a future college student, budgeting can help alleviate the burden of student loans. To begin formulating a budget, you must discuss expected expenses with those who will be financing your education. Topics to cover include how your family will pay for college, the overall cost of attendance for the schools you're applying to, and the expectations around opening a credit card. Additionally, it's important to evaluate anticipated costs like housing, dining, textbooks, and transportation. And finally, you should begin to keep track of your spending habits while also creating an emergency fund and retirement fund to prepare for your future.
So an understanding of banking is really important because throughout your life, you're going to be depositing into the bank as well as taking money out of the bank. And there are two different accounts within banks. One is called your savings account, which basically acts like a loan. So it's no different than any other loan, and you can lend as much as you want to the back, and the loan will be paid back along with some interest. A checking account is a little bit different in that you are not paid back with money, but certain services instead of interest.
I'm sure most of you have heard the term credit before. So credit can be classified as a borrower's ability to purchase goods before paying for the good itself, all dependent on the idea of trust. This transaction can take place on varying scales, ranging from buying clothes using a credit card to the government dealing with a budget deficit. When lending a good to someone, it is important to evaluate your level of risk. This level of risk depends on how trustworthy a borrower is in the sense that they will pay back the expected amount of money by a certain deadline. Such a risk is managed by lenders evaluating their candidates based on income, credit history, and debt level. If a borrower's credentials are not strong, they will end up with a low credit score, which is unfavorable. Credit should be used for needs and items you know you can afford.
So we're going to talk a little bit about this idea of interest, and the idea of interest is interwoven between many different financial concepts such as insurance, loans, and even the way that government bonds work. So interest is the money that you have to pay back in addition to the money you loaned. So it's calculated as a percentage of the loan's principal amount and is paid to periodically. And there are two different types of interest. The first is called simple interest, and the interest rate remains constant for the number of times you're paying an amount periodically, which can be monthly, yearly, it really depends. And compound interest is a little bit different because this interest rate fluctuates with every time it's compounded within a given um, within a given period. So from month to month, it could change. From year to year, it could change. And some examples in which interest plays a part are car loans, consumer loans, retail installer loans, and these can also be calculated monthly. And these are all examples of simple and compound interest.
As future college students, it's important to know how to afford lofty tuition fees. We have a few pieces of advice that we find important and that might help you along this long journey. The first thing to do is to identify your lender and repayment plan, basically, those who help manage your loan repayment process. Also, discussing options with your college's financial services office can help you choose the best repayment option that fits your financial situation. One important thing to note is that a shorter repayment timeline results in a higher monthly cost and less interest. Longer repayment timeline results in lower monthly costs and more interest. It's also crucial to pay loans with the highest interest first. You'll be saving a lot of money this way. In certain situations, some have their student loans frozen through participating in a variety of government-sponsored programs. As a college student, it's also important to make sure that you prepare financially for health emergencies, as costs of injuries can be up to thousands of dollars unexpectedly. After getting health insurance, you have access to preventative care like annual doctor's visits, shots, and a greater variety of services. A deductible is a cost you pay to health services before your insurance kicks in. Choosing the insurance plan should factor in their offered deductible.
So a loan is the lending of money by one or more individuals, organizations, and or entities to other individuals, and this can include the government. You can owe loans to the government can owe loans to you, as well as there are different types of corporate loans and municipal loans. So the two main loans we're going to talk about are personal loans and debt-based investment loans. So personal loans include the basic auto loans, home mortgage loans, as well as credit lines. And you can get all these loans from the bank, and you obviously have to pay the interest on top of the principal amount, which is what we kind of discussed earlier on the interest slide. And debt-based investments are also otherwise known as bonds, and these can include corporate, municipal, and government bonds. And so, if you've heard of the U.S. Treasury, UST bills, those are basically government bonds that you purchase, in which the government will agree to pay you back that same amount added with some interest. And a lot of corporations and companies make use of these loans, i.e., bonds, to fund their business operations.
It's important to be aware of how financial fraud happens and what steps to take to avoid being caught up in a scam. One instance is card cracking, and this is essentially when a third party gets hold of a student's credit card PIN and information, depositing stolen checks into their student's bank account, and then withdrawing money from the account before the checks are registered as counterfeit. Some tips to avoid this include keeping your card and PIN secret and not depositing a check from an unknown source into your account. With tax scams, students might get a call from IRS impersonators claiming that they have not paid their student tax yet. It begins with a small fee around $100. Tips to avoid gauging in a situation like this one includes knowing that the IRS only contacts students through physical mail delivered through USPS. The IRS will never demand immediate payment through a specific payment method like gift cards or wire transfers. And the IRS will not threaten you. Some scammers prey on low-income students needing scholarships or the lowest rates of student loans. Scammers will typically guarantee a scholarship while requesting a down payment. Another way students are scammed is through identity theft, where scammers steal portions of your personal identifying information, including your social security number, name, or date of birth to gain access to your financial and personal accounts. Some tips to avoid this is to never give your PII over the phone unless you initiated contact yourself, and don't offer your financial information online unless it is clearly a secure transaction. Finally, make sure to memorize your social security number, as you really don't want to be carrying it around in your purse or wallet, as somebody can steal it, and that's just one pathway to identity theft.
Now, the investing part of our presentation, we're going to be talking about, I would like to begin this section talking about the different financial markets and the ways to invest. The first way you can invest are investing in different equities, which includes stocks, bonds, real estate, and precious metals. We then have some options trading that in which you bet that a stock price would reach or go down to a certain number, and some of those includes stocks, exchange trading funds, futures trading, and futures trading, is basically a legal contract in which you have to bet that the value of something will increase or depreciate in value. And foreign exchange is where you bet on the value of currency. So you basically invest in the value of currency. So you may be, oh, this is.
So to begin investing, it's important to understand the basics of financial literacy, which we reviewed over the past few slides. Teach yourself about how credit works and try to save money within your daily life. Being frugal and understanding the value of money allows you to be smart about your investing decisions when putting more of your money into investments as opposed to the extra Starbucks drink. Additionally, investing isn't all about the stock market. Knowing simple finance terms like credit scores and high interest debt will help you when you are setting up your investment portfolio, which actually isn't only stock. You can learn more about personal finance through Schwab MoneyWise, which is a digital resource where young adults can start managing their finances, such as credit or debt management, planning and budgeting, and saving and investing. Create a Roth IRA if you have a job and or have money in your bank account to start saving. Roths are funded with after-tax dollars, but withdrawals are all tax-free. You will learn important terms like compound growth and present and future value of annuities for retirement. The next step would be to create an account. In most cases, parental assistance is needed to open up your account. We suggest beginning with paper trading, though. Essentially, paper trading is a stock market simulator and risk-free. You can still execute trades and track the market accordingly, and some platforms that support paper trading include E-Trade, Webbull, and TD Ameritrade's Thinkorswim. To create an account to invest actual money, we suggest a few platforms including Robinhood, Acorns, Ameritrade, and E-Trade.
So the question arises as to, can a high school student be a market investor? And there's a stigma that a lot of high school students can't actually invest in the stock market, but there are many examples of students who have actually tracked the market and have actually invested some of their money and grown profits. So I have two different news segments. The first one is about a person who founded a high school investing club and made $72 million stock trading. And the second is a person who was a Wall Street trader who made $300K trading on his parents' account when he was only 16 years old. So I want to kind of debrief a little bit about the stock market history in the US, and it's actually quite fascinating. In fact, in the formative years of the United States, Alexander Hamilton suggested that the US open a stock exchange, which was a model that he had observed in Europe, because Europe also had a stock exchange in order to finance a lot of their economy. So the American stock exchange was actually modeled off of the European stock exchange. And so the US Treasury encouraged the trading of different government securities, which we now know as different T-bills, on the corner of Broad Street and Wall Street, which is how we know Wall Street is the finance capital of the US. And right now, the stock markets have grown to be the most important parts of the global economy. They signify the global economy's economic health, and countries around the world depend on stock markets for business financing. So we're going to go over some terms that you need for investing. So today, investors use brokerages and computer-based trading applications to buy or sell different stocks, bonds, options, futures, and currencies. And in her previous slide, Shreya mentions a couple of trading platforms that allowed us. This includes E-Trade, Robinhood, and TD Ameritrade. There are a bunch of computer trading applications in which you can execute different trades. And so these different brokerages, once they receive your intention of placing an order, they will execute these trades so you can track them. And the way that the stock market works is that you buy or sell shares of stocks, options, futures, or currencies with an expectation that the price of your investment will change and possibly increase to some value for a profit that you can keep. And when investors believe a particular stock will drop in value, they choose to sell the stock. And when they see that a stock could probably rise in value due to consumer demand, they would probably buy the stock. And so there are three different trading biases that go in when stock market trading. The first is bullish, which means you expect that a certain stock will increase in value in the future. Bearish, which means that you would expect a decrease. And neutral, which means there's some price stability and there are not too many fluctuations. So today's stock market. So basically every country, you would be surprised, has a stock exchange. There's the London Stock Exchange, the Tokyo Stock Exchange, on top of the New York Stock Exchange, and even war-torn countries like Iraq have their own stock markets, even though they don't have a ton of publicly traded companies. The main idea is that stock markets exist around the world, and trillions of dollars are traded on stock markets every day, making them the best, making them the engine of the capitalist world. So there are different indexes that can kind of track how different types of stocks are doing, and some of these you probably would have heard of. One is called the Dow Jones Industrial Average, and this index fund tracks the top 30 U.S. stocks in terms of market capitalization. And if you didn't know, market capitalization is basically the calculation of the current stock price of a company multiplied by the amount of shares that the company has. So it's basically the value of stock held by a bunch of shareholders. And then we have the NASDAQ, which holds a ton of tech stocks, including Facebook, Apple, Netflix, Amazon, and Google, and as of recently, even Tesla. And then we have the S&P 500, which includes 500 stocks, and this index fund is usually a measure of volatility and how the current buying and selling volume is in the stock market world. And then we have three different types of three different types of terms that we sort companies into, them being the small, mid, and large cap stock companies. So small cap stock companies have less than $2 billion in market capitalization. So they're relatively newer companies with less market cap. And then we have the mid cap stock companies, which have between $2 and $10 billion. And then large cap stock companies, which have market capitalizations of 10 or more billion dollars. And examples of some notable large cap stock companies include a lot of the tech stocks right now. So Google, Alphabet, Apple. So there are a bunch of things you need to know when deciding what stocks to purchase, what stocks to sell. And there are two different analysis tools that investors use in their decision-making calculus, the two of them being fundamental analysis and technical analysis. So to kind of highlight the differences between these two terms, fundamental analysis are usually the type of analysis that buy and hold stock investors kind of search for. And when I mean buy and hold stock investors, I mean investors who keep stocks for years or months and years and only expect to sell stocks way down the future. So they're really looking at the fundamental growth. They're looking at how they're analyzing the income statements, looking at earnings growth. They're looking at the growth rate, inventory turnover, and basically how they see the products that companies are selling, how they would fare in the future. So they're looking at a more wholescape view of how companies in different sectors are performing. Technical analysis are what swing traders kind of engage in, where they analyze price charts and use mathematical algorithms and studies to determine buying and selling trends and price swings. So there's usually a lot of calculus and a lot of programming and tech involved when doing a lot of these technical analysis trends. So there are a bunch of tools that these swing traders use, and they usually buy and sell a bunch of positions even in one day. And to protect your losses and increase your profits, there are things called protective stops and profit targets. So to make sure that a stock doesn't go too low and the investor is not losing money, an investor will place a protective stop where they will sell their stock if the stock reaches a certain price below the price they bet that the stock is going to be, so they don't lose too much money. And a profit target is when an investor has a profit in mind, and they will place an order in which they say that if a price of a long stock rises by 50 or 60% in growth, then they would sell that stock and keep that profit. So, like how I discovered, how just like how I discussed before, the four pillars of wealth include equities, options, futures, and forex trading. And I also forgot to say cryptocurrency is another way in which you can invest in addition to forex. So what I have here are two examples of different technical analysis trends. On the left, I have a line chart, and technical analysis includes really tracking the points of resistance. So basically, when the stock price isn't fluctuating by too much, but kind of being stagnant, and we're looking at highs and different lows. So these price charts show current prices, price movements, and price trends over time. And then on the right, we're looking at there's something called the Japanese candlestick chart, which is probably one of the most important and popular popular ways of viewing technical analysis. So each candlestick represents a day in which there is the lowest price, the highest price, and the opening and closing price of a stock in a given day. And this can be used for pretty much any investing for technical analysis. So there are a bunch of resources in which you can learn a lot more about finance or finance investing, and learning about how learning about how looking at different sector and company trends. And some of these include Yahoo Finance, Seeking Alpha, Google Finance, as well as Investopedia. You should definitely check all these out. A lot of these are really, really good at explaining and breaking down a lot of financial terms. So there are a bunch of financial careers in which you could get into if you have an interest in finance and or investing. And the one I have on top is called is investment banking. And within investment banking, there are a bunch of different jobs that you can enter. There are financial sector analysts who really delve deeper into different sectors and research about companies. So there's a lot more fundamental analysis going on for that role. And then we have research analysis and quantitative finance. So these jobs usually require a lot of math and mastering of some coding and programming language to really get into the nitty gritty details of when to buy and sell stocks. And there's a lot of risk management and portfolio management required for these roles. And we have private equity, which is a little bit different. Investment banking is really managing portfolios of IPO companies, so public companies. Private companies are companies that aren't IPO'd, so they're not actively selling shares or anything like that, but they are selling securities, so like different corporate bonds. So private equity analysts really look at private companies. And then we have economic analysts who work at different companies, and based on the state of the economy, they'll kind of advise different financial and business decisions. And then we have financial planners who really help people manage their financial portfolio, which can include different stocks as well as saving, how much to put in savings and different accounts.
Yeah, so we actually have a list of a few educational games that we suggest to help acquaint yourself with some terminology within financial literacy, how some of these concepts work, and especially how to get involved in investing and kind of immerse yourself in that setting. So a few for investing would include Investor, MarketWatch's virtual stock exchange, Investopedia stock simulator, and Stacks. And Stacks is actually one I play pretty often. And it's actually really fun if you get to play with a few friends or family. And in that sense, I mean, basically what happens is that Stacks is a 20-minute game, and each minute is a year. And in that year, you kind of simulate, you have options that grow over the years, where you're introduced to an index fund, or you have options to invest in multiple companies. And it's really, really like a time game. And at the end of the game, the person with the most money and who had the most success, most consistent success, you get all the statistics of how you did throughout the game over the course of 20 years. And the person with the best statistics overall, they win the game. So that's one game, and I'll actually send the link to that in the chat if you want to take a look at it. And then another set of games that we suggest for financial literacy would be Payback and Spent. And Payback is another game that I'm very well acquainted with. And in this game, you simulate a college experience while being faced with choices. about like, oh, do you want to rent textbooks or buy textbooks? Do you want to go join a sorority? Or, it gives you these options like you would face in a normal college setting. And you kind of you start off with zero college student loans, and you start off with the cost of attendance. And from there, all these additional expenses kind of add up, and you really see how student loans play out in real life. So this would also be another game to to learn about student loans and how to manage them. So I'll also send this in the chat right now. But overall, I think educational games would be very good for interested students to immerse themselves in these concepts. And finally, we are so glad you were able to listen to our presentation today. Here's our website, financeforteens.org, and I will actually send this in the chat as well. And you can reach us at financeforteens_ on Instagram, and financeforteens@gmail.com via email. And through our website, we keep up with current blog posts and events, and try to engage our listeners and viewers. And we hope that you really enjoyed today and learned a little bit. But if you have any questions for us, please, let us know right now, or you can shoot us an email or DM us on Instagram. But we really enjoyed our time today.